Hey guys, it's Ben Nathan here from Forex Mentor Live. Now, I'm currently in the live trading room at the moment in our live training program, and we've been going over something very important to all traders. Now, of course, trading psychology is important. Of course, having a strategy is important, as is being consistent. But there's one thing that many traders quite often overlook, and that is when not to trade. Okay? Of course, on all of our minds, every day, all day, when should we trade? What trade should we do? But what about when shouldn't you trade? Now, there's a couple of things I look out for, as do all of the members. Now, the one thing we have is a little indicator that tells us what kind of room up and down we have in the average daily range. Now, quite often, as those figures get lower and lower, and less than 10 or less than 20, quite often or not, the market can slow down and start to retrace against itself. So if you're a trend trader, once that ADR starts reducing, you might get caught out by reversals on those trends. So keep an eye out on low ADR. But another thing I wanted to show you in terms of when shouldn't you trade is when the market's ranging. Because we all know when the market's ranging, it's a very, very dangerous time indeed to be trading. It's quite often better to sit back and not trade. So how do we spot a range in advance of a range happening? Well, there's a very simple little fractal pattern we look out for. And the pattern is this. We look for a lower upwards fractal as well as a higher downwards fractal. Okay, so when we see this, if you draw a trend line over the last two upper fractals and also under the last two downwards fractals, what happens is you see a right hand side arrow, and that generally means that the market is headed into a range. So let's have a look at what happened. I'm going to mark out the candle after this 4-hour candle. Okay, so at this point we knew the market was looking into a range, so that's the first red line. And then at this point, let's have a look here. So the second red line indicates a time where that last lower high fractal was confirmed. So it appears line number 1, that's when the warning sign goes off as we could be heading into a range. Line number 2 is the confirmation that we are indeed range bound on a 4-hour chart. So let's have a look at the 15-minute chart and have a look at what exactly happened following those lines. Once we find them, of course. So okay, I've gone back a little bit too far. There we go. Okay, so line number 1 is here. So that was when we had the warning sign that we could be headed into a range. Okay. So what happens then? If we go over line number 2, which is this one here, that's when on the 4-hour chart that range was confirmed. And just have a look at what happened. Following that, we did indeed get sucked into a very, very tight range for a good 3 or 4 hours there. Okay, and as you can see, the range was very small. It was about 3-4 pips. Then we get sucked back into it a little bit more. We have a breakout to the bottom of the range, it gets sucked back in, breaks to the top of the range and gets sucked back in again, and then we form more ranging until we finally break the range to the upside. So there was that period of around a day where we didn't leave a range of 6 pips. Okay, so that small, easy pattern to read gives you advanced notice of these ranges before they happen. Okay, so just to confirm this then, so on a 4-hour chart, if you see a lower high followed by a higher low, as soon as you see that pattern, that's your warning sign. As soon as the last fractal is confirmed, so that's 2 complete candles afterwards, that's your confirmation of the range. And that's when it's best not to trade at all until that range finishes. Okay, so that's a little brief lesson that I hope you can use yourself no matter what strategy you trade hopefully you can use that to avoid some of those trades that would otherwise be losing trades. Now, onto the room itself. As you probably well know by now, we have reached capacity in the room. Okay, so we're not actually enabled any sign-ups at the moment because we're just too full. However, the good news is, due to demand, we are expanding the live trading room so that 10 more people can join our course. So what we're going to do, for those 10 spaces, we're going to release a pretty special rate for that. Now, there's going to be some exciting software included called Forex Tester 2. We're going to go over that next week, and we're also going to put together a pretty special package for those 10 individuals. And it's going to go out via email, so keep an eye on your email box. They'll probably go within the first hour or so of the email going out, so just keep a listen out. And that offer will be going out next Tuesday, and as I said, that's 10 new spaces becoming available as we expand the room due to the demand for the service. Okay, so I look forward to seeing you guys on the course and look forward to trading with you in the live trading classroom.